All right, we got the opening bell here on this Wednesday morning. You see it for the NASDAQ, where Brian Sazzi is, although I don't think any confetti's falling on his head right now. And we are seeing it at the NYSE as well. Saz, there's a concert going on where you are right now?
Julie, very energetic here. You see that IPO over at the NASDAQ here. You saw that confetti. They're actually downstairs, but it's good to see people back before the company's IPO. You saw a lot of folks in the NASDAQ wandering around, enjoying the times, understanding the company. It's good to see this IPO activity coming back. Very much enjoy it.
Yeah, I believe there's the first Chinese IPO of the year is actually scheduled for sometime this week as well. So that's something that we're watching. You know, since we're talking about Airbnb, Saz, I also want to talk about Hilton that came out this morning because, again, we are seeing this sort of contrast now and competition between the new model that Airbnb has put forth and a company like Hilton that's perhaps still reliant on business travel, for example. Those shares a little changed. Hilton's actually performing better than Airbnb, even though maybe some of its numbers are not as strong as estimated. Earnings per share, you can see they're coming in missing by 4 cents. Revenue did come in ahead of estimates for Hilton. And the comparable revenue per available room more than doubling, up 104%. Adjusted EBITDA margin coming in at 65.4%. So that, too, was a little bit better than estimated, although that revenue per available room coming in a little bit short of estimates. So let's call it a mixed quarter when it comes to Hilton. But again, the contrast between it and Airbnb is very interesting. And again, a bit of a head scratcher as Airbnb shares fall.
I think this quarter from Hilton, Julie, very much mirrored what we heard from Marriott earlier this week. Top of mind, improvement year over year in occupancy, improvement in revenue per available room, or RevPAR, as many folks call it here. But still, Julie, it's jarring to see occupancy levels for Hilton in the U.S. 63.3%. I can't help but to go back to pre-pandemic. And these levels were, I believe, over 90%, and people were out there traveling. You just get the sense it's going to take well over a year, or perhaps 2 years, just to get these occupancy levels back to those pre-pandemic levels, in large part as business travel starts to kick into high gear again.
You know, I am very curious, though, as we watch this evolving situation, now that Omicron has passed, how quick is the snapback going to be? You know, I'm of two minds about this. I don't know about you, but I have to say, leaving aside the controversy of people unmasked at the Super Bowl versus LA schools that still require masks, leaving that aside for a moment, I was watching the Super Bowl thinking, people are done with this pandemic, right? You know, we know mask mandates are being lifted around the country, including, at workplaces. Some states have announced the removal of mask mandates for schools, although that's trickling down. Disneyland, I believe, is removing mask mandates for vaccinated individuals. And so are you going to have that people are done, they're going to get back to travel very quickly, including business travel? Or do you have a once bitten, twice shy situation where especially corporations, which are slow moving, are not going to want to push their people back out there again? It's going to be really interesting how it plays out.
Well, look what Marriott said yesterday, Julie. They noted, and they were one of the first companies I have heard mention this on their earnings release, their trends were back to pre-Omicron levels. So not even noting pre-pandemic levels. They're saying, hey, we saw our business impacted by the Omicron variant, but now it is back to pre-Omicron levels. And secondarily, to your point, Julie, of people being potentially over this pandemic, I think we saw it in the retail sales report this morning. This was a very, very strong month for retailers.
Yeah, good point to sort of bring that back in. And I'd like Jerome's point at the top of the show that we did have Omicron last month affecting things. People were buying more online, perhaps, and not going to places like restaurants and bars, which we saw fall 0.9% last month. So all of that filtering through as people get back out there now, and we'll see how the February numbers look